top-line story. Sam Bankman-Fried, the man behind the failed cryptocurrency exchange FTX, is now back in the United States. He, of course, faces fraud charges related to the collapse of FTX, and before traveling to the U.S., spent time in jail in the Bahamas. This morning, it is being reported that two of his former associates at FTX have pled guilty and are cooperating with authorities. Bankman-Fried is expected to make a court appearance in New York today. For insight, let's go to our featured guest of the morning. He's Greg Taylor. Greg is Chief Investment Officer at Purpose Investments. Greg, welcome to the program. First of all, let me welcome you to the program. Let me first tell viewers a bit more detail about what's going on. It's being reported that Carolyn Ellison and Gary Wang, these are two former senior executives at FTX, have, as we just told you, pled guilty and are working with authorities. And legal experts are calling this an ominous sign for Bankman-Fried. Lawyers saying that when prosecutors make a public display of going relatively easier on people who plead guilty and cooperate early in the process, that can be a big negative for the central focus of the investigation, which, of course, is that man, Sam Bankman-Fried. The allegations are, of course, that fraud took place at FTX and at Alameda Research, a related firm, and an attorney for Gary Wang, who recently made a billionaires list in the news media in the United States. That attorney for Wang says his client has, quote, accepted responsibility for his actions and takes seriously his obligations as a cooperating witness. So not only are the prosecutors making public statements, but the lawyers for some of the co-accused publicly signaling that they're eager to cooperate with authorities. Greg, you're an expert in the crypto market. Your firm, Purpose Investments, has a suite of cryptocurrency ETFs. How much damage has this particular story done to the crypto market? Not for the first time we're seeing a crypto-related exchange go down in a heap.
Well, I think there's a few things with this. This is certainly an area that got incredibly speculative asset. And when you look at how much money was printed in the last few years, money went to a lot of risk assets. And we saw it with SPACs in a lot of different areas. And crypto is certainly one of the areas that really benefited from that. And we saw Bitcoin go close to 70,000 about a year ago. And really, as the Fed started to turn off all the taps, we're trying to figure out where the real companies are. And like any other bubble, we're seeing a lot of these speculative activities really come out of this. And we're seeing which companies are real and which aren't. And FTX is definitely going to look like one of these old-fashioned frauds and scams. And they're kind of been with finance since the beginning of time. And this one isn't really that much different, other than it happened faster and probably on a more public scale than anything else. But there was definitely a lot of speculative activity happening in crypto. And FTX is probably the worst of all the trades that came out of this. And it's going to set things back, because crypto is really all built on the open network, and everyone thought, well, this is something that doesn't need to be regulated. And I think everyone's now waking up to, yeah, it kind of should have been regulated, at least from the exchange point of view. And I think this is where I don't think crypto is going to go away, but it's going to go through a sorting out period here. And coming out the other side could be a lot healthier commodity. The
crypto instruments that Purpose has brought to market trade on the Toronto Stock Exchange, a very much regulated stock exchange. What is it telling us that non-regulated entities like FTX, or very lightly regulated entities like FTX, have failed? Again, not for the first time. We had Quadriga collapse here in Canada, and years ago there was an entity in Japan known as, I think, Mt. Gox, or I believe was the name. It was one of the early failures in this space.
Yeah, and the big reason we launched those funds was really that we saw the demand, and a lot of people wanted to get involved in the crypto space. And the way they were doing it was risky. They were going to unregulated exchanges. They were buying it from a friend. They were transferring it to different wallets they weren't looking after. And we decided to copy some of the other way commodities have been brought forward to the ETF in a fully regulated environment where everything is stored, it's fully backed, and that's really what we did. And the big thing that we had to go through when we were setting this up and working with the OSC was making sure that the ecosystem, the counterparties we dealt with, were of the highest grade. And we spent a lot of time working with our custodians, making sure that we're dealing with fully regulated custodians. We deal with Gemini and Sidel in Canada, and we only deal with exchanges that were fully regulated in the US, and such as Coinbase and Galaxy. And I think that's going to prove out well, is that's something you need to have. Is you can have exposure to crypto, but you want to have it in a nicer environment that's got more regulations involved, and something you can actually look at and make sure it's backed by something.